I'm LA Little, and this is your daily TA wrap. Where we take a look at these markets, and we do it from a neoclassical perspective each time, asking ourselves what happened today, and what does it tell us about the coming days. I do this show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time, here from the beautiful, what a gorgeous day in the Rocky Mountains. It is springtime in the mountains, and that's always a beautiful time. I really enjoy this time of the year. I enjoy the fall, the spring. We get that Indian summer, in the fall is really nice, but nothing like seeing the grass turn green and the hillsides, all those little rocks start looking good again. So, markets. What do we do in the markets today? Markets really didn't do anything today. They grind a little bit higher, but today was pretty much in my mind is a no-op day. It doesn't really mean anything. You're coming back from a 3-day weekend. Most of the markets still closed overseas overnight. We just drift, and which way we're going to drift? Well, we're going to drift in the direction of which way we've been going, which has been up. So it makes it 4 or 5 days up here. Let's see. Industrials, 0.25% higher, 16,449. That was 40 points, almost 41. S&P's tacked on 7, 1872 almost. Composite up 26. That was over 0.5%. 41.21, 26 higher. 35.59, almost 35.60, 25.5 higher on the NDX. That was almost 0.75% in the Russell. Up 0.4%, 4.4 points, 11.42 and a third. Gold traded, and this is after hours. It was up a couple bucks. I had a radio spot I was doing after hours. I didn't grab the numbers. Had a Winning on Wall Street radio interview with Mark Mandel, the Wiz. That was interesting. They asked me back next month, so that'll be cool. And we had bonds up today. Dollar was flat. Again, nothing really major happening in these markets. If I go over and look at the sectors, the biggest gainers today was IBB, right, which is the biotechs. They got up to 2227, and 227 was a number around 228. I think I was telling members might be an interesting place to look at this. Maybe we'll have a chance. We'll look at it a little later together. The social stocks were up again today. I saw Facebook up pretty big. Facebook has earnings. And this week, next week, the following week, it really is about economics and earnings. If you just step back for a second and you look, at what's going on in the economy, I don't see us falling off the cliff anytime soon. And springtime's here, things are starting to get rolling again. That's probably good from an economic standpoint. That's probably good for the market in the fact that things are kind of rolling along here. They're not falling off the cliff. Yeah, there's danger points. There always are. But right now, economically, it doesn't look horrible. Is it great? No. It's not. We're 5 years into a recovery, so to speak, and it's painfully slow compared to most recoveries. But it's 5 years into it and it's still going. So, from that standpoint, you have to say, well, I guess that's not too bad. From the standpoint of fast growth, not happening. It isn't happening, hasn't been happening, probably isn't going to happen yet. We don't have inflation yet. You and I have inflation, but we don't have a quote-unquote government official inflation. But stocks are able to slowly grind higher in this environment. And as long as the economics are okay, then it comes down to earnings. Can I bring that money to the bottom line on the company balance sheet? And if I can, they're going to reward me in the markets. And whether I do that by buying back my own stock and propping up my PE, or whether I do that by buying out some other company, right, and getting my organic growth that way because I can't do it any other way, whether it means that I squeeze more out of my workers, or whether, whatever it is, however I do it, if I can draw it down to the bottom line, I'm going to get rewarded for it. And that is how the market works. And so, from a fundamental standpoint, that's what's important. And we're in that part of the season where we find out whether they can pull it to the bottom line or not. Some can't, some can. What you want to do is you want to split them up. You want to take the ones that can, and those are the ones you want to look at buying if you're going to be buying. You look at those that can't, and if you're going to short something, those are probably ones to look at. So when I look at these leaderboards, IBB back up there, the social stocks, these may be nothing more than just little bounces. We have some that we know are taking off and have been taking off, like the oil sector. That one's been hot, still is hot. A bunch more earnings coming out in that sector as well. So a lot can be learned in a lean market, a market that's struggling, so to speak. And from my perspective, that is what you're looking for. What can and can't perform in this crucial time. As far as technicals, if we go to the neoclassical thought, when you break down, you have to break back over the bar that you broke down. And usually that breakdown bar is somewhat dramatic, either higher volume, wide price spread, something. This is a wide price spread, somewhat high volume bar. I'm on the Dow Jones daily chart. Top of that, guys, is 16,456. We got up to 16,459. So we test over it, right? 5 days straight up, test over it. You did it Thursday with more volume. Oh, look at that. Didn't get over it today. So Thursday you tested higher with more volume. Today you test higher than that bar, but not the prior day's bar. So it's not a 2-bar reversal. But you are up there. You're trying to get over the highs, and you can't, at least so far. So that's somewhat of a failure at the highs and at that key reversal bar. If we come to the S&Ps, 1872.53 is that number. 1871.89 was our close, doing 26.4 into 37. You got no volume as you're hitting that level. Resistance zones there. Probably going to test it tomorrow, and I suspect going to fail on it. At least some sort of a pullback as a result of that. So Dow's already trying to do it. Here's the S&P's coming up to do it. If we walk over to the weaker guys, in particular the Russell, which is kind of the lead, canary in the coal mine, so to speak. Here we're doing a retest regen off that swing point low. As it comes up into that higher area, volume is tailing off again. You're straight up. This is going to have some real difficulty right in this area. So I suspect that's going to be a tough spot to get over if it gets there. That number is 1147.80. We're trading at 1142. We're only talking 5 points. It could test it tomorrow if it's going to. Now, it doesn't have to make it. And I've made this point before. It's been asked of me before. When I have a retest regen bar, and what does that mean? That simply means that we broke down through this bar. And when we do, and if we come back within 6 bars, which we are, that means we're probably going to test to the top side of that big bar that we broke, in particular the swing point low that was broken. We're going to test to the other side of it. And as we come back up there, we don't have to actually get to the other side. In other words, we don't have to test the top of it. You can fail anywhere lower. It doesn't matter. The question is, will it regenerate lower? And is it simply setting up another ABCD structure to the downside, just like so many that we've already seen play out all along this big cycle, one after another, right? 1, 2, 3 of them so far. Will this be number 4? That's the question. That's really what we're looking at. That's really what we're asking as we come up to there. Are the buyers going to pay more at higher prices to get into this or not? If they're not, then that's less demand. There's probably going to be more supply. Price has to come down to force more demand. And that is your supply-demand equation. So we'll see very soon if the Russell can get over that level or not. If we look at the NASDAQ's not even close to it yet. Here you don't have the swing point lows to break. The damage was stronger here. NASDAQ coming back up same way as the Russell. The test would be way up here, and we're not even close. if we see a straight up run up to that area from here, then the probabilities increase that in fact it's going to fail up there on the first try. As it is, it probably would fail on the first try. If we go over and look at the weekly, and the reason I bring this up is we have swing point lows that have been tested already, right? And this is on the weekly time frame here. So you got a swing point low here, another one there, right? Those swing point lows, if broken, are probably going to lead to a faster move to the downside because it would mean breaks on multiple time frames. That's the biggest danger that exists out there. And if this market starts pulling back, right, that's the thing you're going to have to be looking at, because that really is what can hurt you, right? That's my danger zone, right there. So if you got a pencil and you want to mark up your chart, mark it up, point to this area, that's where you want to watch. A break at that level is potentially going to mean some trouble. If I go over and look at the weekly, not the weekly, but the daily charts with respect to the sectors, there's nothing wrong with most of these. IYT's going back to the top. It's going to test the top, or going to try to. If I just flip through the sectors, today is kind of a nothing day to me. XLB fails at that resistance level. XLE extends right higher again. If we pop up the OIH, which we were looking at just a second ago, that one's over the highs as well. So you can see the strong sectors, the weak sectors. If we go look at the semiconductors coming back to an area that they should try to fail. And when I'm looking at these, I'm looking at the same thing here that I'm looking at on the indexes, and that is the breakdown bar. That's the bar, the big wide price spread bar, right? Big dark candle. You got to get over that to tell me that you're going to keep going higher. If enough sectors get over it, then we're probably going higher. We've already seen the IYT do it. We know the XLE did it. What else do we have doing it? XLI over that top. what was the other one? Oh, the XLP and the XLU never even questioned that top. They were over it, still over it. So those four pretty strong. If we look at some of the others that are close, we got the XLK coming back up there. You got the XLF coming back up there. You got the XLV coming back up there, which benefited today from biotech. You have a bunch of them coming back up there. There's enough over it now to potentially pull the rest with it. If in fact we can get over that level on the indexes, I suspect we'll see all those other sectors come up there and test and try to get over them. If that's true, this downtrend has been in place. Maybe this was it, right? Maybe this was the extent of the pullback. Now, what's interesting to me to even be saying that is if I walk over and I look at the weekly and I'm taking the XLV, which has been pretty weak, this doesn't look like much of a pullback when you pull it back to the weekly. I mean, it is 8-9%, but folks, we went up like 30, right? 40, whatever the number was, right? It was huge last year. In this particular index, a year ago, we were trading at 43, it looks like. Now we're trading at 60. That's 17 points on 43. My math's not that fast, but that looks pretty close to 20+% minimal. It's got to be closer to like 30. Those are big moves. And when you start coming back, right, even though they don't look like big moves to start with, 10% feels like a big move off the top. But, in retrospect, it seems like nothing compared to what we did just, had up last year. So on this time frame, you can't really get bearish. It's just a natural occurrence. I mean, it needs to come back. Matter of fact, it needs to break some of these swing point lows, right? Because once it does, you'll get some fear coming to this market. You'll get some lower prices where you can actually buy something of size, and nobody else will want to buy it at that time. What better place is there? And I know a lot of people like to think of that as falling knives, but you'll get signals on the way down that tell you, this is probably the spot, and that's what you live for. I mean, that's where you make your money. It's hard to make money when it just grinds higher.
Let's see here. So gold broke down a little bit today. Not bad, but a little bit. Let's see what gold looks like. All right, on the weekly, really nothing on the weekly yet. Just a sideways day. So you got a little gap down today. Volume expands a little bit, nothing big. It's trying to get to that low that we were talking about last night. 123.57. Almost there. And there's no ABCD structure on the downside except for the large one. So if I do the ABCD structure here, it actually isn't that bad, but it says that you can make a lower low. So an A to here, a B almost all the way back up, right? A C would take you just down into this area. And maybe that's where it's trying to get. You know, gold's struggling, and at the same time, as I've talked about many times, on an intermediate term time frame, you can go back and review some of the others. It looks to me like it's putting in a bottom. But bottoms, after large declines, they're a work of art and patience. They take a long time. I'm pulling up the monthly chart. You can see this decline. You did a sideways kind of a decline here, a bump up, and then the big decline, and now you're doing the sideways thing again. You know, if it breaks here, it's going to get ugly. But as long as it holds, you know, this thing's trying to put in some sort of a bottom and curl back up. And if so, you know, it can run quite a ways. I mean, just to get back, I mean, think about it this way. We always talk about on a daily time frame, you know, a swing point low retest regen. Well, you have one here on the monthly that needs a retest, right, at some point. And if I look at that low is 148.53. We're trading at 126, I think, 124. So it's about 24 points higher. That's a large percentage. That's 20% just to get to the bottom of that, right? In which case it probably would fail there and regenerate or attempt to regenerate lower because it's way more than 6 bars on the monthly. But these things take time. If you're trying to trade it, you just have to be patient. You got to wait for it to come to you. And you know, what else can I say about it? Golds are good. You know, it's a good trading vehicle. All right, let's look at bonds. What did bonds do today, if anything? I know they were up a little bit. Let's see what it looks like on the chart. Nothing. They gave it up mostly. So I didn't see that at the end of the day. I took off the last hour or so and didn't really watch the market. So looks like we gave up almost all those gains, actually a little bit more than all. So bonds trying to drift back in still. They'd finished up another ABCD structure to the upside. Looks like to me they're going to try to get back into this big bar, which defines the top of the boundary. 109.34. 109.96 is the close. And let's take a quick peek at the dollar while we're here. And if you guys have some questions, pop them in. I'll have some time tonight and I'll look at them for you. Yeah, dollar's drifting higher still. That maybe is why the pressure on gold today. Okay, let's see. Let's see what kind of questions we have. No questions. Oh, don't disappoint me. Talk to me. All right, let me go check my email and my text and see if there's anything there for me. And if so, I'll do that. I had a nice radio show with Mark Mandel today. I didn't talk about it yet. A lot of good questions about, you know, where the market is, where's it going. We'll try to post that on the site, at least a link to it when they put it up. And text messages. Oh, I do have a text message. Okay, so let me see what this is. All right, so the question here is, they want to know about AutoNation. AN, and they want to know about the short and intermediate term time frame to buy it. So let's take a look at it and see what it looks like. So symbol's AN. This is like a dealership for autos. I believe they had earnings just recently. Let me check here. Because actually, this was a stock I was looking at the other day, I believe. Yeah, they did. They had earnings on 4/17 actually, so that was just last week, Thursday. So they popped up on earnings, sideways day to day, So they tested the high, had higher volume. They're in a consolidation, or have been. Yeah, that doesn't look bad. Let's see what the weekly looks like. Well, so on the weekly they broke out. So you actually have a breakout on the weekly, and going back to the daily, a breakout brewing. I don't know. That looks pretty good to me. You know, I would try, if I could, and it did it today, I'd try to buy the bottom of that bar. The danger here, just like in the markets, right, is you have lots of swing points lining up underneath you. And this is true in many stocks and in the market. Folks, if they come down here and start flushing these things out, right, there's going to be a lot of stops down there. And that's what happens when you go sideways long enough, right? You build up a large set of stops. And so, you know, AutoNation right now is trying to break to the top side. But, you know, we're not talking about that far down. $3 on 55. You're talking about 6%. 6%, you're down here risking a total collapse, if you will, all the way back down into this area potentially. So you can see, you know, if you're going to buy it up here, you're going to have to either play a very tight stop, which reduces your probability of success, or you're definitely going to have a stop down here somewhere just like everybody else. And so that's, you know, that's kind of a big move down before you get it. So, you know, the question then becomes, okay, where's my risk reward? You know, am I able to find enough reward versus the risk that I have to take, right? That's what you're really looking at the end. And I don't see what that is, because here, you know, I don't have a breakout. I don't have any kind of ABCD structure yet. I don't have any of that stuff. So there's no projection measurements. I don't have a left side of a chart as far as I can tell. Let me pull it back to the monthly real quick. And I don't have it there. We're at all-time highs, I guess, right? Or at least at all-time recent highs. And you got a breakout on the monthly as well. So I think you're just going with the strength of the stock itself, and you're just going to have to assume a range projection breakout. That's the best you can assume. That's 52 to 55. That's about 3. Takes you to 58. So if you're going to go to 58 on the top side, and you got a risk of about 4 on the bottom side, you got to catch it somewhere lower. So it looks to me like you got to wait on a retrace if you're going to play it. I'd play it somewhere around the 52 to 53 area if I were going to buy it. So that's AutoNation. All right. I got 5 minutes. There wasn't much open from last night. Let me look over at the general world markets. I think we only had a couple of them trade. I believe Hong Kong traded last night. Let's see if they did. No, they didn't. Yeah, I believe the Chinese Shanghai did. Let's see if we got a market there. We don't have a market there either because they trade on the Hong Kong exchange. I don't think we really had hardly anybody trade last night, so there's nothing to look at overseas. So coming back then to our markets, and let's take the last couple minutes here and just think about where we're at. 5 days up, right? So you basically had a low here, and now you've had 5 straight days higher. Is this another one of those V-shapes? I mean, we talk about this more and more, it seems, anymore, because we see it so often anymore. And, you know, we've seen these things before, they take off, and they just keep going, right? Is this another one of those? Well, if the earnings and the economy provide the impetus, right, you know, then yeah, we could, but I think you're going to get some sort of a small pullback in here first, at least, and that will give us some sort of a measurement that we can look at. And what I'm talking about is I could see a situation where we come back, you know, not that deep, maybe into the top of the lows, and the lowest one is here, so somewhere in there. So maybe we come as deep as here and then try to make it go higher, and then of course, you know, a break over here is going to take you right back to the top. If you get a pullback. If you go straight up there, you're going to fail for sure. If you get a pullback, then you can get up there and at least give it a decent run. You want to see, matter of fact, what you'd like to see if you want to short the market is you'd like to see it trade slightly over tomorrow, come back, leave kind of a, one of those little hanging man kind of situations. Actually, it's not a hanging man, it's kind of a reverse hammer, and see it trade back under on even lighter volume tomorrow. And that'd give you a pretty good shot for some sort of a retrace. But I suspect you are going to see a retrace here because Dow's already telling us that. They're all running out of volume as they're coming up here. And I don't think there's that many stops sitting up over that level yet. So you get it come back, then you'll have some shorts that have to cover and some stops that are built up. And then you have a better shot at really pushing it higher on the next move. That's the positive, right? The negative is just the opposite, where if I pull this to a weekly, and on a weekly, you could be setting up, if it gets a little bit higher, you could be setting up, and this one doesn't show it very well, but you could be setting up an ABCD structure to a downside. Now, if I look at something else, like if I pop over to, let's go to the NASDAQ, or let's just use the Russell, since the Russell's a good indicator. The Russell, it's much cleaner, right? The Russell, you have a very clean ABCD structure setting up. Let's see if that was higher. It was. So the structure is from here, right? And it's very clean at this point. And so if this market, if I can get let's try this again here. Please give me my marker. Where's my marker? It's like I lost my marker. Well, anyway, if you could get a move straight down to here, we've already got the B point setting up, the C point setting up. Then you could get a more significant move that could break out these lows. So the risk is that this bounce really doesn't carry. In other words, we don't get a little fade and then carry higher. If we don't, if that fails to develop, then you really got to be careful about the downside. That's a little further out because it's on the weeklies. The daily is the test now. We'll see that test probably tomorrow. And we'll get a good feel of whether we're going to go pull back. Once we get it, then we'll see if they can, come in and push it up again. And a lot of that's going to be earnings. Do the earnings come out? You got Apple, you got Facebook, you got a lot of big names in multiple sectors. And those are going to be what drives this market short term. All right. Well, folks, thanks a lot for joining me. I appreciate it. You tell a friend, tell two. Have them come over and check out what you're doing. We got some good stuff, of course, things that can help them be consistently profitable in the markets, which is really what I try to teach. Have yourself a great night. Thanks for joining me, and I'll see you next time. Good night, folks.